I think let's fast forward a little bit to today, right? Today being this little pocket, we'll call it, of the last 5 to 6 months of COVID, which is it has a lot of other things going on, of course. But you've seen growth stocks and predominantly some technology companies within that spectrum perform pretty well. Outside of the entire market, not just maybe value stocks. Some say it's justified. So others suggest maybe it's overdone.
Yep.
I'm not asking you to predict the future, but any thoughts there on just, again, kind of keeping it in that academic framework?
Yeah. I think, let's think about the year-to-date period, right? We're here sitting in August. If we look at the last 7 months of what's gone on from kind of the beginning of 2020 until the end of July, as you said, there's a lot that's changed in the world, right? The world feels and looks a lot different than it did January 1. We've definitely seen, if you look at large growth stocks in the US, they've outperformed large value stocks by about 30% over that time period. They've outperformed small value stocks by a little bit more than 40% over that time period. Those are massive numbers. And so I think, clearly you kind of hit the nail on the head of people have a debate of, is it justified or is it overdone? Well, that's kind of the beauty of markets, that different people have different opinions and everybody's kind of coming and agreeing to transact on a price. And I know we'll kind of talk a little bit more about that later, I'm sure, but regardless of which way you slice it, that's a significant outperformance for growth stocks so far this year. Well, when I think about it, going back to that concept of ratios that we were talking about, right? Fundamental ratios. If you look at a price to earnings ratio of growth stocks, large growth stocks in particular in the US, and you compare that to two things, if you compare it to other parts of the market, and then you compare it to large growth stocks historically, right? So let's think about the price to earnings ratio for the Russell 1000 index, which is 1000 growth index, which is large cap growth companies. That was right around 35. The price to earnings ratio was right around 35, so a multiple of 35 times earnings at the end of July. If I look back over the last 10 or so years, what's the PE ratio been for the Russell 1000 growth index on average? It's been closer to 21. So that's significantly higher than where it's been on average. And then if I look at that same 35 for large growth stocks and I compare it to small value stocks as an example, well, small value stocks are trading at a PE ratio of between 12 and 13. So again, significantly higher. So for me, what does that mean? Well, people are either building in really, really significant growth expectations into the prices of those growth stocks, or they're expecting a much lower return for that investment.